The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've had a special request to talk a little bit about some cycle stuff that I'd mentioned here on the program several times from the work of Jim Hurst, Profit Magic of Stock Transaction Timing. And we'll do that after we cover the DAX, which you can see now has been, coming down pretty much like we had hoped. Now, you notice they haven't had a big run-up like we've had here in the U.S., and that U.S. run-up is basically Boeing, and we'll cover that also in just a little bit. Also, we need to get a little salutation for our good friend Norm Winsky, who brought us the attention of this new moon and lunar eclipse that we had, coming in on Monday. And we've had this, pretty big reversal. Whether it's going to mean much or not, we'll have to wait and see. But again, Norm's work was very, very interesting. We've had a couple people in the den that were screaming about it too. Peter from Park City, and also Mr. Z was in there. He, even Steve Rhodes said there was a possibility of a, slight correction, and that's exactly what we got. A slight correction, about 500 and some points in the Dow from high to low. So we'll see if it's going to be, working to as we go through. We'll cover some of this stuff as we go through. But the one that's interesting now is this is the FTSE that we're going to look at next. And you can see we had that big ABCD on the daily up there at 7,800. And now we've dropped over 300, exactly 300 points, not quite, 250 points down. And we're right at the 61% retracement now of the low from way back on the 12th. And then also, if we can see where the 78% retracement comes in, so that's telling you there's major support there. So you've got three major ratios coming together in the FTSE at that spot. So those are the kind that you really like to see, because when you have three ratios, that means you have three cycles that are in there, and that is giving you a pretty good spot to put a position on to see if it's going to work or not. Let's get back to the Dow Jones being up so much this morning. Folks, most of the, well, not most of it, almost all of the Dow Jones, well, not all of it, that's not true. It's a lot of several different stocks, but the big stock in the Dow this morning, of course, is Boeing. It's up well over, I think it's up about 20 points. You'll notice here that this is one of the things that I was looking at this morning when I heard the earnings coming out on it. I said, wow, I wouldn't want to be, I was saying to myself, of course, I wouldn't want to be short this stock in the earnings, especially after it had a pretty good correction. And now it's going to be opening 22 points higher, up around that 1.27 level at 358. Now, I don't know if it's going to go much higher than that, but that's going to be one heck of a gap that's in Boeing, and most probably the gap will be filled at some time. But that's just how I look at it, on what the emotionalism of the market is, because I'm a technician, and as I try to look at it, that's really what I have to look at. I don't have any at 360. That means it's going to get, thanks a lot, Mr. Z. That means it's going to get up to that 1.618 level, which is around 362. And of course, above that, all bets are off. It can go a whole lot higher. So anyway, that's what I do the same thing with the commodities. I'm watching the same thing. By the way, those of you folks that are, bought some wheat, this is the time where you probably, use a really tight stop on your wheat now, because we've had one heck of a big run coming off of that bottom, and we're over this, the eclipse is today, as a matter of fact. So with this full moon, and so I would be just a little skeptical. And it could be a weather market in wheat too, because if it keeps running higher, there's nothing else you can do. But if you're trading the cycles, you got to pay real close attention today in the wheat market, because we've had a really nice run here in the wheat. We were expecting it to happen. It's happened. So now we're going to be looking for a little correction in here and look to rebuy it. But that's what we're watching here in the wheat as we look. Okay, the question that we have today is about high translation. And I just wanted to, before I do that, I want to cover something from our good friend Jim Flanagan at GAN Educators. I wanted to bring this to your attention because Jim was showing the relationships, and this is a weekly chart on the S&P going back, quite a ways. And what he does is he looks at relationships from previous weekly highs. And if you'll notice that period that we had, way back here on, oh boy, that how many weeks was that? That was back in 2011. You can see that we had this period where the market went very, very strong for about 2 years. And you'll notice that he's looking at this same relationship that he's watching here. Why he picked January 26, I have no idea. But I did want to forward it to you to show you that these swings do have some similarities because they're related, to the ABCD structure that we look at all the time. And that's the real key to these markets, because that's all the market ever does. It goes up or down or sideways, and it does it in ABCD format. And if you can understand that ABCD format, which its different ramifications and nuances, it'll be a big help to you. Especially gaps are, very, very important with that also. But let's just get to translation, high translation. I just want to bring this up to you. This is the question we had was about the gold market. Let me just get this up here so we can take a look at it. This is going to take more than the break time, so I'll go slowly to walk through it. When Hearst wrote his book in 1970, published by McGraw-Hill, at the same time the book came out, another book came out with a torque analysis of stock market cycles by William Garrett that really was the exact opposite of what Hearst was talking about. Garrett was talking about markets that moved in Fibonacci sequences and harmony and that kind of stuff, whereas in his book was $29, whereas the profit book was $8.95. Back in 1970, $29 was a lot of money for a book. But what high translation means is, if you notice on the left-hand side, this is gold, and you'll notice that the market rallied and made a crest very early in the cycle and then went down. Then you see the next cycle, it crested just about mid-cycle, didn't it? And then in the third cycle that we're in now, you notice that it crested on the right-hand side. Now, the $64 question is it going to crest early like we have now, and that's going to be a double top, or is it going to continue and go higher, for the next, 15 weeks or so? We don't know that answer, so that's what we're trying to look at. High translation was a very good a thing to look at with cycles. Some of the things that Hearst had in his book worked really well during the 70s up to about 1974, and then they started to shift because when he was looking at synchronicity and periodicity, those are things that were related to the harmony of the market, but other things that he talked about in those things, in some of those rules that he had, proved to not work as well later on when the markets became, a lot more volatile. So keep that in mind. As we're looking at this, we got a break coming up, but I wanted to give you an idea of high translation as we look at it in relation to IBM. And if you give me a second here, we'll be right back, and we'll talk about this in just a moment.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a question from Gator, and I think it's a really good one. And his question is the fact that we're looking at this eclipse and we're coming down really hard into it, could this be a low? And the answer to that is absolutely. And so we'll see if it's going to be a low or not. We'll know, because if we go below the 2518 level in the S&P, then I would think that here again we'll be looking at something more to the downside. But this is also a very, very strong day as far as powerful. So this is certainly the case. So that's the main thing to look at. So I hope that's correct. We won't know until later. You know, no one knows the future for sure. But let's take a look here at this chart of IBM, because this gives you a really good idea of what this cycle stuff that Hearst had was all about. This is the type of chart that we would get on Saturday morning by special delivery in 1972, I believe, is when the service started, called Cyclotech. It was stayed in business for a couple years. It was started by a gentleman named Ray Frechette, who worked with Hearst to put this thing together. And boy, it was really booming, let me tell you, because it was working just perfectly. These markets back in those days would bottom every 10 to 20 days and then go up for 17 days and then come down for 3 or 4 days, you know, proving that right translation was certainly a bullish phenomenon. Later in 73, 74, when the markets changed character, it stopped working, and so did the service. So that's quickly how it went. But if you'll notice here on the IBM chart that we're looking here, you're looking at basically a 67-day cycle that's in here, and you can see the high translation. If you look at the first cycle, you'll notice that it crests really early in the cycle there in June, and then it comes down into August. Then it crests on the right-hand side up in October, and then comes down into late November, and then it crests late in January. So you see it's cresting far to the right. Now, this, when you're looking at this, I didn't know what, I knew what a Gartley pattern was, but I didn't really follow it very much until, you know, later. But this is a perfect Gartley pattern, and if you add this to the mix, it really gives you an idea that you're looking at something that could be, very, very helpful because you've got several swings coming together there. There's your ABCD structure that, that Gartley talked about on page 249. The second thing I wanted to mention here is if you're going to short a stock, short the one that is the weakest. And IBM is much weaker than Boeing Airlines. Now Boeing Airlines might have a great potential, and you certainly don't have to risk very much because if Boeing goes above I believe the 365 level, that would violate the 1.618 level, and you certainly have no idea where it's going to go after that. But there might be a lot of people that are willing to take some profits off with the stock opening, $20-some higher. I don't know if that's going to be the case or not, but watch it very, very closely. This leads us to the second part of the cycle thing that I wanted to mention, and that is how I got into the astrology part, and that was after those cycles stopped working in 74 and the market went down and I lost a lot of money. I realized that I had done something wrong, so I had to realize what my errors was. My error had nothing to do with technical analysis, folks. My errors were due to money management. I mean, I did everything wrong that you could possibly think of. Boy, I added to losers, never used stops. I mean, I just did everything wrong. But I had made so much money, I just didn't realize that something like that could happen to me. And I'm only, I'm just a kid. Well, not a kid. I was a kid then, but not now. But I was 30, so it was no big deal. And I knew I could make it back, so it was not even a factor to even consider. So after I realized what I had done, I went back and looked at all of my trades and what I had done wrong, and I literally got ill as I was looking at it. So, oh my God, how could you be that stupid? But when you're successful and you're making money and you're walking in the clouds, maybe some people are doing that, like in Bitcoin, you don't think properly, and that's what got me into trouble, that I was not following any rules. But after a while, about a year, I started to realize that we can do this, except that you've got to protect your soldiers, and your soldiers are your capital, and you've got to be able to protect that as we look at it. Now, I've had a question. I hope that helps with the cycles, because I always believe in these cycles, but I've watched these astro cycles work pretty well. Boy, they're far from perfect, let me tell you, but they do a pretty good job, especially the lunar cycles. The lunar and the Mercury and Venus cycles they seem to be the best because they're shorter term, they're easier to see, but you must add the patterns in with it. Otherwise, it doesn't make any difference, because time is the most elusive of anything that you could possibly look at here, folks. It's very, very elusive. So you've got to use something to protect yourself, and that's where the patterns sort of help. And hopefully it'll help. Not all the time, of course, but that's what we're trying to do here, is to give you an idea that it's all probability based. It's not based on certainty by any stretch of the imagination. A perfect example is the wheat market. It's a situation where we've had a really nice run in wheat, and we're right over a cycle high, so it's probably time to take a little bit of profit. Now, we're having some pretty good volatility in the euro and stuff this morning. We just made a nice little Gartley pattern in the euro up around this 124.60 level. We could get as high as 124.90 without too much trouble, but it looks like the euro is getting ready for a little bit more of a correction. We'll have to let the markets decide whether that's going to be the case. So we'll move on to the next one here, see if we have any other questions that are coming in. I think the main thing that we need to watch today is the close in the market, because we're going to have this big gap up today, and we'll be able to see if we're going to continue or not. Someone's asked the question, is this the top in the market? Hey, nobody knows that. I mean, it could be. The market in 1929 on September the 3rd, I know it was either a full moon or a new moon. I don't know which it was, but it was right on the day. But no one knows that. I'm going to cover the gold and silver right now, Bob. I was going to get to that. We'll cover it right now. First of all, because we're really at an interesting spot here in the gold market. Let's just get this up here and take a look at it. You'll notice that we went down to that we dropped $34 down from the high, and then we had a really nice rally up. We rallied $15, and then we came down 14 bucks. I mean, that was really unusual. That sets up an ABCD. We took out the previous day's high here at the 1348, so we really need to get this market to be bullish. Gold's got to get higher than this 1353 in the next couple of days. Otherwise, you're going to be looking at that phenomenon of left translation, or left translation, where it's going to crest early in the cycle. Anytime this gold goes below the 1330 level, that is not going to be good. That would definitely be, high translation to the left. But right now, it still looks fine. It came down, stopped exactly where it should have, retested it. It's got all the things necessary to keep it going higher. The $64 question is it going to continue? But right now, it's doing everything first. It's all about risk control because we don't know how far it's going to go. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the Dow E-mini last night during the State of the Union message. Just a second, Boeing is going nuts. It did open at the 360 level. I want to get this out of the way, otherwise it's going to drive us all crazy, but you don't hear it, and I do, so give me 1 second to get this out of the way here. The 1.618 on this comes in at 364, and we're trading, well, 359 now, but it opened at 360. There, I got it turned off. But I posted a chart of this Dow E-mini during the time that the election was going on, the State of the Union was going on, to see what would possibly be a price objective if we were to get to this level. And we're up here right now. We're trading at 26,290 in the Dow E-mini, and that's nothing more than a 382 retracement with a little ABCD structure, lined up with it. So this is the first hour of trading, which is also known as amateur hour. So you don't want to mess with that, as you see this stuff unfolding, real early in the morning. It's best to wait that first 45 minutes, and then you have a really good idea of what the opening part is, because so many of these orders come in right on the opening. The volume on the opening is huge, and that's when people can take advantage of you by looking, well, not like they used to. We used to be quarter half. Now we're trading in pennies, so that really doesn't matter anymore. But you got to remember, these mutual funds and ETF people, they come in right on the opening a lot. So you've got to be aware of that and give it a little bit of time. That's why if you were looking at something like Boeing, and I was using that as an example, is to watch to see how it reacts up here around this 1.27 level at the 358 level. Now here you got a $358 stock. You can certainly trade it for $5. I mean, boy, that is really cheap. That's just a tad over 1%. So watch that, because it's a very, very good way to control your risk by watching what that opening is doing. So, and that's the advantage of the opening price, is you do see some of that occurring very much. Years ago, before we had electronic trading, the opening price was far more easy to understand than it is now, because with electronic trading now, they're trading 24 hours on some of this stuff, and it's a lot more difficult to discover what what is happening with some of these swings. So just use your own judgment, of course, but watch amateur hour. That's the first half hour to 45 minutes. After that, the markets settle down a little bit, and you can usually have a smaller risk in order to get in and see what's happening, with some of these markets. So we'll pay attention to that as we walk through. By the way, I've been in contact with Kevin Murphy. He was the gentleman who worked with Bill Ehrman of Ehrmanometry, and he sent me some really, really neat charts. He's going to be our guest here very, very shortly and go over some of this stuff, because he believes that he actually sent this to me, I believe on Sunday night, saying that there's a possibility we could have a pretty big reversal there on Monday, and that's so far what we've had, and that's all it is right now, is a small reversal. We just barely backed off a little more than 500 points in the Dow, which is not very much, and we've given, got almost half of that back in just a matter of a day. So it's still early, but we'll have him on. He's got some interesting mathematical things that are looking at it, and we'll be able to see, what's happening. As far as the notes and bonds, folks, they still look lower, but, like we mentioned with that potential 3-drive pattern that we had in the bonds yesterday down at that 147 and change, we got down to 147.06, I believe it was the low yesterday, and then we rallied, and we rallied the whole point. We're back to the 148 level, but I don't think we're going to get above the 151 level on any rally here. But the market is extremely oversold in notes and bonds, and people are watching it, especially those notes broke the 271 rate. In other words, a 10-year note was yielding 2.71. It hasn't been there in 3 or 4 years. So that's telling you the rates are going higher. The $64 question is, how much higher are they going to go? And that we don't know. We'll just have to see what the market is going to tell us. So remember, this market long term is extremely bearish. We had a question about I wanted to show you the difference between the high yield bonds, or junk bonds. You'll notice that the junk bonds are still have interest rates way back, but below the area of November the of early November, you can see what's happened with the Treasury notes, but the high grade or junk bonds are still holding up extremely well. That would give me a little bit of fear, because you'd think that people would be more discriminatory when buying bonds, that you'd want to get a higher grade bond at a pretty good price as opposed to doing a high yield bond. But these markets jump around quite a bit, so pay attention. They don't call them junk bonds for nothing, folks. But remember, the reason why they, I don't know if you realize this, a good book was written about it by James Stewart from New York, called The Den of Thieves, and it shows how the market for bonds changed, because Milken basically changed the name from junk bonds to high-yielding bonds. That's what he did. And of course, he got the nickname of the Junk Bond King, and boy, did he hate that name. Anybody that ever mentioned that around him, really, they didn't do it the second time, I can promise you that. So, but he did help finance a great deal. He's a brilliant financier for sure, because back when he started promoting these bonds as high-yielding bonds, interest rates were going through the roof. We had T-bill rates at 13%, and companies that wanted money, the only way they could get it would be to, bring out a bond offering, which would be a junk bond, i.e. high yield, and that's what made the difference. So at one time, during 1980, I believe, there were AAA tax-free municipal bonds in California yielding 13%. And if you were in a 50% tax bracket, that was the equivalent of a 26% return, tax-free. And believe me, those things, they disappeared in the market. The problem was they were callable, so they were only good for about 2 years, and then the municipalities, called the bonds and, brought out a different issue because they didn't want to pay those high tariffs. But during that time, for 2 years, it was really a really good deal if you could buy these high-yielding bonds that were, in fact, these were not high yield. These were AA and AA and A bonds, municipal bonds for different states yielding over 20% tax-free. But those days don't exist anymore. Okay, we've got Boeing trading at around 359 now. We've been trading about 8 minutes, so not much is happening in the market. It's still jumping around to see what's going to happen to some of these things. We're getting ready to move. We got all the way down to, we backed off about 6 or 7 points in the E-mini, but didn't do very much. So what we're going to be doing now is to watch this 382 level, folks, that comes in at the 2841 level. That's going to be equivalent to that same number we were looking at, in the Dow Jones here. So watch 2841 in the E-mini S&P.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to talk just a little bit about the crude oil. Yesterday, we were looking for a potential, low to come in around the 64.30 level. The low actually came in at the 78% level to the exact tick at 63.75. One of the questions one of our listeners asked about was the harmonic number in the crude oil, and as I did from memory, I thought it was about 88 pips, and so I went back and double-checked it, and that's pretty close to what it is. It's right at around 88 to 90 pips. You'll see moves that jump around quite a bit. Now, we did hit the exact 78% level yesterday at 63.65. And so far, we've rallied only about 70 points since that time, and we're going to see if it's going to have pretty much of a rally here. But we want to watch the quality of this rally, because we want to see how quickly it can make the 382 retracement, which will be up around the 64.80 level, and there again, you'd be right at your almost at your harmonic number. So that's what we're watching in the crude oil. So far, we've only been able to rally about 70 pips off that bottom, but it's done it without any trouble. So that tells you the importance of that low down there at 63.60 in the crude oil is what it looks like. It could be very, very interesting for sure. Next week, we're going to try to have Stan Harley on as our guest, and we're also going to try to get Alfie Lavoie from Air Software. Alfie's the one that does all the cycle stuff for astrology. It's got that incredible titanium program that Shane Smolian and Shane used it. I basically watched what he did, but I'm going to try to get Shane on too. But the problem is, folks, he's just so darn busy now that he just doesn't have the time, especially real early in the morning, when the markets are opening. So we need to ask that. One of our listeners has asked a question if I would bring up the chart that was posted by Mr. Z in the room here. And, we need to talk about the football game, too. You'll notice that ABCD pattern that potentially came up in here. Now, this is a long-term weekly chart. So, it can have some variance in it. But whether that's it or not, we really don't know. We'll have to be able to see if that's going to be the case. Okay. The football game. This is my opinion, folks, and I haven't bet on a football game since 1975 when Nebraska played Oklahoma, and Elvis Peacock did a play called the Missouri Flea Flicker. It was a trick play, and I lost money on that game. And I was with my good friend Bob Gilmillion. He was there for a Saturday dinner with the family and stuff. And we had the game won with just a few seconds to go, and we fell on the floor, and we were just terrible. My little daughter came in and thought I was dying. And since that time, I never bet. I still play the horses once in a while, often as possible, but I'm lucky at that, but I don't do that. But I do believe in my heart that I believe the Eagles have a really good chance of winning. Nick Foles played here, their quarterback for Philadelphia, played here at the at Arizona, and boy, what a wonderful human being he is. He's really a nice kid. He's 29 years old, and he and his wife, his high school sweetheart, did all kinds of charity work for women's cancer and for children's stuff. I mean, he's just really a nice kid, and so modest. But he's playing against the Prince of Princes. You know, how do you go against somebody like Tom Brady, been the greatest quarterback of all time? I mean, and he's a great guy too. So it's going to be an exciting game, I hope. So I think we'll be able to see it. I hope it's as exciting as last year's. I mean, that was unbelievable, but, you know, it's always unbelievable. But anyway, that's what we're looking at here. We'll move on. The big sports game happens here every morning at TFNN as the markets open at 9:30 and go on till about 2 o'clock. So we'll see what's going on. Let's double check to see what the markets are doing now. We're still having a little bit of a rally, but, you know, not really very much. The euro's backed off now from its 61% retracement. Gold is getting a little suspicious to me, folks. It really needs to. We took out yesterday's high by $1. That's not really bullish action. So you just watch this gold very, very closely here. We don't want that gold to get below 1330. That would really be a negative, because what you'd be looking at is a 2-day rally, and that would not be a good thing to see this happen, because if it does, it's going to be real interesting. You know, it's I don't know the answer to it, but you got to be really careful. You know, that's basically the bottom line. The bonds, we didn't take out yesterday's high as of yet, but we certainly could. I don't believe the bonds will get much above the old breakout point of 149.18. That's, you know, 1.5 handles from where we are right now. That would take a pretty good rally, but will remain to be seen. Someone's asked a question of what is the ramifications of the State of the Union. Folks, come on. I mean, that's way beyond my pay grade. You know, we only get one of those every year, so I don't, you know, they're short term, if anything, but, you know, who knows what they're going to do. I just look at the charts. That's basically all I try to do, is to see the ABCD patterns, the Gartleys, the butterflies, the 3-drive patterns, the 1-3-5s. Those are the ones that I try to look at, and we'll, you know, whether that's going to be the case or not. Let's take a quick look here at Boeing and see where we are now. Now, Boeing, we got as high as 60, almost 61, 360.97, and then we went back below the 1.27 at 358, and now you're trading at 354. That probably is going to put a little bit of pressure, I would think, on the Dow today, because we did get below that 1.27, but we did not make the 1.618 expansion in the Boeing, which came in at 365, thanks to our good friend Mr. Z to remind us of that. So it's coming down pretty fast here. It's dropped about $0.50 since we've been talking, but $0.50 on a $354 stock is nothing. So we'll have to wait and see if that means anything or not. Okay. Someone's asked a question about silver. Silver is still lagging the gold market. It's held up relatively well, so nothing has really changed. The whole key to that market over there is that 1330 level. If we get below that, that's going to be a very, very negative thing, in my opinion. So make sure you have stops in there, because we almost got them yesterday, because we went up to 1347. We dropped $12 an ounce down to 1334, and it held, and now we're back up another $14. So it's holding its own. It's acting pretty good, but it needs to get above that 1353 level in gold, and then it's off to the races. So those are the things that we're trying to keep our eye on this morning as we look at these things. We won't know whether crude oil is going to be in a downtrend or probably its movement below the 63, 65. That would break the 78% level, and then you'd get a move down in that level. That's like when we broke the 2848 level in the S&P. That was signaling that the trend is most probably had turned down, but that's still early. We'll take a break here. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I had a request to put up the chart of the spot wheat, March wheat, and I just wanted to point out two things. You'll notice that we did hit this lunar eclipse and full moon, and also you can see where the 61% retracement came in. We're trading about 3 cents below that. And also, if you'll look at the low back on January 16th is when we had the solar eclipse and new moon. That was the bottom in the wheat. So between lows and highs, you have to at least take a look at these lunar cycles as they happened, especially in the grain markets, because this was covered in Dr. Andrew Lowe's book, The Technical Evolution of Technical Analysis, and he spent the first 50 pages of that book talking about how the Sumerians and Babylonians and other cultures had looked at these cycles in wheat and corn and put them on these tablets that are still available today to see that they were looking at some type of cycles that were related to these planets. And how they ever figured that out thousands of years ago is beyond my pay grade, but pay attention to it. Sometimes they work, sometimes they don't. But what you need to do is you need to have a ratio or some way of quantifying your risk at that particular point. And usually a ratio is going to work within, at the very most, 3%. So if you're trading wheat, 3% of wheat, it would be around 12 cents. So that's $600. That's the most you'd have to trade wheat as far as risk control. And, you can't be a farmer for $600. That's, it costs a lot of money just for a tractor, land, feed, labor, all that other stuff. But if you buy a commodity, you're basically a farmer for however long you hold it, and that makes it pretty easy. So that's what the value of the futures markets, of a way of, you become an insurance man. You're taking the other side of the insurance policy. So watch it. We're going to be following this wheat as we go through here to see how much of a correction we're going to get. It looks very bullish. Frankly, a 382 in this around 12 cents would be all you'd expect. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!